Hey, good morning, everyone. Welcome to the Macro Snapshot, the new week. We are Monday, May the 11th, 2026. Okay, guys, let's have a quick look and see what's going on. Quite a lot of, some interesting things going on this week. We do get a bit of data. Just want to check out here, just the Bloomberg list here. So what we can see here, not a huge amount today. What we do have is Kashkari and Hammock, who are both dissenters, hawkish dissenters from the Fed meeting. So it'd be interesting to see a justification for their hawkish views. So we have that today. But what's probably going to be the main thing over the next few days is in the Americas here. You can see in the US, we do have the US CPI, followed by on Wednesday, we also have the PPI. So we're going to have an updated sort of inflation reading. And then later in the week, we'll also get, you can see here down on Thursday, May the 14th, you see retail sales. So we're going to get a sense of how the US consumers holding up, and also more importantly, probably the inflation situation. Apart from that, the big picture, we have a Trump and Xi summit over in China later in the week on Thursday and Friday. I believe they're meeting. We also have Scott Bessent, who's meeting with sort of a lot of officials in Japan. So Ueda, the prime minister, and also the finance minister. So that could have implications for the yen. So some interesting things going on. And let's just look and see just sort of the mix which the Fed is sort of facing at this point. There's the big macro situation. We had the non-farm payrolls last Friday, and on the face of it was pretty good. You can see here that it does seem as though we're in sort of a no hire, no fire kind of regime. If we actually look at the sort of establishment survey, so of sort of businesses, you can see it added about 115,000. So that's looking quite positive. If you look at the trend, it seems to have stabilized. On the other hand, there were some revisions down to about 16,000. The unemployment rate remained at 4.3, but the household survey was down a little bit. So in terms of jobs, about 200,000 jobs sort of lost. So it looks as though sort of the business survey was relatively positive, but the household survey was a little bit negative. And also average hourly earnings was down to 0.2 per month. So it does look as though, just stepping back, slightly contradictory sort of measurements in a sense. But if we look at the labor market overall, it seems to be relatively robust, but maybe slightly slowing. So slightly slowing because unemployment rate is not sort of going down. It's kind of stable. The household survey, as I said, lost a few jobs, and average hourly earnings went down. So maybe indicating that workers have a little bit less power. On the other hand, there are jobs being added in certain sectors like the healthcare, sort of home help, and also sort of leisure and hospitality. But we're not really seeing jobs in manufacturing or let's say in sort of engineering, these kind of jobs. So overall, it seems to be a situation which is, not bad. So a relatively strong labor market, or let's say, relatively robust, but not certainly sort of expanding and not necessarily collapsing, because of course, there's not a huge amount of immigration, if any, happening at all. So that means the Fed, in terms of their mandate, they need to sort of start looking at the inflation. And we all know that the energy costs for sort of fuels and also crude, sort of unrefined products is going up. And just having a quick look here, if we just look at sort of some of the CPI numbers, essentially that had, we all know that in 2021, 2022, that was very high, and it had seemed to be sort of trending down towards target, which is about 2% ostensibly. But the problem here for the Fed is that this now does seem to be moving up, and you have a lot of capex sort of expenditure. You have a relatively strong job market, and you also, of course, have sort of massive. You have tariffs as well, and you have supply chain disruptions. I don't need to explain that because of what's going on Iran. So the problem for the Fed here is that one of their mandates does seem to be edging absolutely in the wrong direction. And, we did see some dissents at the last Fed meeting, and that's why today's sort of comments by Kashkari and Beth Hammock, are going to be kind of interesting just to see whether they see this as sort of a bit transitory or whether they absolutely believe that, maybe even hikes are going to be necessary. And in terms of the market, it is interesting here just to compare. So what we're going to do here is to compare. This is from the Bloomberg function, WIRP, the World Interest Rate Probabilities, which looks at overnight interest rate swaps. Pretty useful function here. So what we can see here is if we look just before the war started, let's say about February the 27th, you can see here that this is on the right-hand side. You can see the number of cuts priced in. And you can see here that the market, by essentially almost like this time, sort of June, July, August, September, October, was pricing in, a first cut and then a second cut. And then by the end of this year, it was actually pricing in even down to sort of three cuts in total. So about 75 basis points. And of course, on the back of that, there was also this idea that Kevin Walsh should be coming in and he would be doing Trump's bidding. But what we can see here is that now, if we look at May the 10th, so essentially just the latest pricing, you can see here the market has taken out, has completely priced out any cuts. And if anything, is essentially pricing no change. So if you look all the way out to the end of this year, you can see the market is essentially pricing nothing at all changing, just it's going to be on hold. And if anything, a slightly hawkish sort of bias. Not a full hike is not yet priced in, so that's not 25 basis points. Remember that one hike or cut equals 25 basis points with this metric. So you can see here what these dots are telling us, that about 10 basis points, 8, 9, 10 basis points of hikes are actually priced in going into sort of at the beginning of 2027. I'm not sure that they are going to hike at this point because that would be politically extremely unpalatable. But that's the situation which we're at. Is essentially, an economy which seems to be doing reasonably well, or is, it's not yet being completely destroyed by high energy prices. And one of the issues here is that we continue to see great earnings. We see obviously there's the tech earnings doing pretty well. And let's just see here, just what markets are doing particularly well. So apart from the obviously the overall stock market, the indices, let's just look under the hood a little bit here, and we can see who's doing well and who's not doing so well. We can see here that even the software companies, which had been beaten down, there was a double bottom, they're actually, the moving averages are starting to move up, and they're starting to show a little bit of life. You can see those moving averages, the 20 has crossed over the 50 here, and in fact is over the 100. So the IGF ETF is looking as though it may want to test it up to the 200 level. And of course, the big one, though, is obviously the semiconductors. You can see here that's doing very, very well. We all understand that. We have the Mag 7s also doing very, very well. They've reached new highs, down a little bit in the pre-market. But if we look also at the equal weight ETF, that's now at some overhead resistance here. So that's not doing as well. And if we look at, let's say, the Russell, it's at highs and doing well. But really, where you have to look at all the sort of the incredible action is the Nasdaq, which had another big up day on Friday, as well as the the ES. So the question really here is, is this justified or not? And one could say, hey, we have sort of relatively high yields, we have high energy prices, but let's keep in mind that when people talk about high energy prices, you've got oil around maybe $100 or so. But if you go back, let's say 10 or 20 years, in inflation adjusted terms, oil at $100, it's not like $100 10 or 15 years ago. It's relatively it's operable in the sense that the economy can function on that. The problem here is that in certain sectors, let's say airlines, they have very high sort of fuel and refined products, and that is becoming a problem. But as long as the real economy it continues to do well, and the sort of earnings continue to do well, I think that we're not yet at the ultimate pain point. And the market is in terms of energy prices, and I think we'd either have to see energy prices up another 20, 30, $40 on both the refined products and the crude products, and we may also have to see some cracks in spending, in household incomes, and also in the job market, which we haven't quite seen yet. And as I said, especially in the tech sector overall, but specifically in the semis, we're getting very, very positive earnings. So the question here is, can this market continue to rise? People are saying it's parabolic. Let's just throw this on. I was just looking over the weekend. Let's throw it on, let's see, a weekly chart. And it's interesting if you look on a weekly chart. Let's just look at the ES here. You can see here, is this overbought? I mean, it's easy to say that, but of course, overbought metrics, let's say the RSI stochastics and whatnot, that could just be a very, very exuberant market. Are we due for a pullback? In theory, yes. But I just want to point out that if you look at all these moving averages, we actually did have a pretty nice pullback a few weeks ago. We have had a little bit of consolidation 2 or 3 weeks ago. So there are some internal consolidations. And if you look at a Fibonacci extended measured move here, you can see that we bounced off the 100-day moving average. Again, this is a weekly chart, and you can see that the extended move, or the measured move on the Fibonacci extensions, the first one comes in at around about 7,600 here on the ES, then 7,950, and all the full measured move would actually be at 8,380 or so. So certainly on the ES, there's a little bit more potential move to go. from a technical perspective. What we do see in the Nasdaq, that does seem to be a little more overextended. No surprise because of the semiconductors. But even there, we're just at the sort of the lower end of this sort of extended sort of Fibonacci extension here. And as I say, just look here, we did actually have a little bit of a sort of a relative sort of consolidation midstream here, so to speak. So I would also argue that even on the Nasdaq, potentially we could get a little bit higher. Now, maybe the first resistance here from a technical perspective could be about 30,300, but it could fully extend all the way up to, let's say, 32,300, at least on these kind of metrics here. So going back to the daily here, which we'll put it on here and just bring it back. The question is, on the RSIs, if we just throw in a couple of some of these. So if we look at some of the stochastic measures here, for sure, are we in overextended territory? We could argue, yes, we're in the 80s. The MACD is very strong, but also the RSI is very strong. So could we have a bit of a pullback? I think that's entirely possible. Maybe a little bit of negativity, but I just want to draw everyone's attention and just see the way the market is trading. If we put this now on a 3-minute chart, it's interesting just to look at last night's sort of price action, the overnight price action. And we can see here, again, 3-minute chart. You can see from Friday, we gapped down overnight. We gapped down, I think it was 30, 40, 50 points or so. But you can see that after about 10 or 15 minutes, basically by, 12 minutes after the futures opened last night, we've actually had a pretty steady closing of that gap. We actually got up and closed that gap. So the point being that the market is in the mood to be buying dips. The market, I think in terms of the Iran news, and of course, why did that gap down? We'll talk about that in a second. In terms of the Iran news, I think the market is basically saying that Trump is looking for diplomacy. And although the Iranian response yesterday was deemed, quote unquote, totally unacceptable to Trump, what we're reading this morning is that, sort of comments from Pakistani people who seem to be informed, is that back channel diplomacy is continuing. So the market, I think, is continuing to price in the fact that, hey, US real economy is doing okay. Certain sectors like, the tech sector is doing very, very well. And that, in some, rough shape or form, the situation in Iran will be resolved. And it's not yet at a maximum pain point, as I say, in terms of sort of energy and refined fuels. That probably needs to go up maybe another 10, 15, 20, 25% to start getting sort of real pain. So that's where we're at there. So let's just continue going through the charts here. If we look at some of the volatility indices, you can see here we had a little bit of a gap up just over the overnight session up to about sort of 18 in the VIX. So that's indicating an implied daily move of just over 1%, about 1.2%, something like that in the ES futures here, or the SPY, should I say, the SPX. But basically overall volatility of the VIX has been behaving itself. It's come down over the last sort of month or so. And again, this is indicating a market which is relatively sanguine about the possibility of sort of massive escalation. We don't have that yet, and the market's relatively happy. If we look at the MOVE index, which of course looks at bond volatility, you can see that had a little bit of a spike over the last few days, but essentially it's not at its lowest levels, but at a reasonable level. Oil volatility is also, it's still elevated, but we're miles away from the highs there. So overall, the volatility patch is not really a headwind at this point for equities, nor for bonds, and that should continue to be a positive in a certain sense. Where we are getting a lot of movement is in Asia. Let's just look at the Kospi. The Kospi is, I believe, ripped higher. So if I can find it, yeah. So if we look at the Kospi, you can see it gapped higher, another, I think, 4 or 5% higher. So again, is this in sort of overbought territory? Probably. But the reality is that, some of these memory card makers, the chip makers, SY Hynix, the Samsungs, are doing very, very well. And in general, the Taiwanese stocks are doing well. The Asian stocks are doing pretty well. And there's a sense also that at the Trump Xi meeting later in China, that will be, probably a positive for sort of, sort of the Asian space in terms of the FX. And just there's not much chance there because neither of any kind of major problems here. So that's quite positive for Asia. Now, can this pull back? For sure, it can pull back. But you see there was a little consolidation on the Thursday, and this has been a fairly orderly run up. Now, can it pull back? Yeah, possibly. But the fundamentals are also not bad. If we look at other parts of the stocks, you can also see emerging markets doing very well. If we look at China itself, if we look at the Shanghai 300 new highs, so that's doing very well. If we look at Australia, not doing so well, and that's just a sense. So what we have to distinguish here is that Australia not doing too well. We can look at Europe as well, which I'll just bring up the Eurostock 600, and also doing okay, but not so well. And basically, we're seeing here that really it's the semiconductors, sort of those those sort of stock markets, very, very exposed to those like sort of in East Asia, Taiwan, China, and also sort of Korea, of course, doing very well. But some of the other more generalist markets, so sort of, for example, Europe, the metrics in Europe in terms of economic activity are not great. And there's also talk that the market that the ECB will hike in June, and that's actually that's about 82% chance priced in of a hike in June. So the point is that Europe under a little bit of pressure. Europe much more exposed to the higher energy prices because it's closer to the Brent benchmark and Iran. And you know, Australia also under a little bit of pressure just because of there's some domestic issues there. There's a budget happening today, and there's a sense that the Labor government is going a little bit more to the left, and the fiscal situation there is starting to show a little more discipline than historically has been the case. So that's a specific story for Australia. But overall, US equities doing very well, East Asian equities doing well, emerging markets doing well. And so equities are fairly positive. If we look at just some of the FX as well, actually, let's just look at oil. We know, as I said, that the Iranian response was deemed unacceptable by Trump. But you can see here that the market had an initial pop. But again, much like equities, if we look at a 3-minute chart, I'll just look at WTI. You can see here that the initial move was a gap higher. So you can see here that the move gapped higher by about $3 or so. And it did sort of, you know, it pushed higher, but you can see here that we got to $100, and just in the sort of European session, we've essentially come down now in the middle of that gap. So I think the best way to look at crude oil is the fact that it's not going down. And again, don't get me wrong, I'm not arguing here for sort of $60 crude like we had before the Iranian situation here, which you can see where we're at. But I think really what the market is essentially saying that structurally there will be a flaw in crude oil prices because the bottlenecks will take weeks and months to resolve, even if everything goes back to quote unquote normal. And it does seem as though we are not going back to normal anytime soon, although some kind of messy compromise will probably be worked out. So I think oil at this point is probably going to be trading in a range, maybe, you know, up to $105. And you can see here where the market is starting to put in a floor around about 85. So maybe like 85 to 105. We're just going to trade there on the headlines in that range. And I don't think anytime soon we'll be going down, you know, into the 60s or 70s. But I don't also think it's going to spike to a new pain point of over 120 or so. But again, it's going to be headline driven just at the moment. Just continuing, if we look at some of the FX majors, what's interesting in terms of the dollar, of course, again, much like the I could put on the 3-minute chart, we can see here that the dollar initially gapped higher overnight, which we should be able to see here on the 3-minute chart, if I'm not mistaken. Yeah, so there's the gap higher, and you can see the dollar, it did push higher, so it gapped a little bit higher. But you can see again in the European session, it has come off those sort of levels. And I think basically what's happening here, some interesting thing. There's, you know, the dollar. Will this collapse? I don't think so, because we have a relatively strong sort of labor market, relatively strong US economy. That's one thing. And that's leading to, as we saw, slightly more hawkish Federal Reserve prices for the Fed. So there's no reason there for the dollar to sell off. There's still some geopolitical risk in the Iranian situation. It's not as though the Iranian situation is resolved. So the dollar does seem to be slightly softening, but I don't think it's really going to sell off too much. And again, we do have the meeting this week with Besant over in East Asia, so that could weaken the dollar a little bit. But I think just for the time being, we might be sort of trading, and let's say about this 98 to about 98.5 kind of range for the US dollar. Now, what's sort of interesting is also what's going on in a couple of the other currencies. I just mentioned the ECB. So the ECB, again, the economic data there is not as strong. That's benefiting a little bit from that slight softening in the US dollar. But keep in mind that most of the strength globally is really in the East Asian sort of market. So we're seeing the Korean won doing quite well. We're seeing the Chinese renminbi doing quite well. And I think that the euro, the only reason this is not really sort of falling a little more is just because, as I just mentioned, there's an 82% chance of a hike priced in for the June meeting of the ECB. And I think really for the euro to rip higher out of this sort of range here, It's probably going to take a combination of things. So a resolution of the issues in Iran, maybe some softer real economy data coming from the US, and maybe the Fed pricing just softening a little bit. And also what could be quite interesting is just what happens just in general with percent. I'm going to be watching that. So if we look here at the USD JPY, um, Besant, as part of the sort of the Trump Xi meeting, is going to be in East Asia in the latter part of this week, and he'll be meeting with Ueda of the Bank of Japan, Prime Minister Takeichi, but also Kitayama, the finance minister. And there could be some sort of talk here about strengthening the yen. The yen is a little bit too weak for everyone, especially the Chinese. The Americans wouldn't mind maybe a slightly stronger yen. So it's going to be interesting to see what happens with the yen here. If there's any talk about FX intervention or potential cooperation between the US Treasury and the Bank of Japan and the Ministry of Finance, I think we could see the yen actually strengthening and the US dollar coming off here a little bit. And that's kind of interesting also to keep that in the context of the renminbi over in China. You can see here that the Chinese renminbi has actually been sort of weakening quite a lot. And the Trump administration will welcome that. Scott Bessent will welcome that. And that's interesting that the Chinese would quote unquote sort of allow that. But what is also something to keep an eye on is just the relative value here between I just want to show you if I have it. Let's have a look here. Oh yeah, so I do want to show you the Chinese renminbi versus the Japanese yen, and you can see that overall over the last 6 months or so, that's been strengthening. And this is a problem here for the Chinese because their currency is strengthening against the not only the US dollar but also against the Japanese yen, and especially in the East Asian trade sort of context, this is making Japanese exports much more competitive compared to the Chinese exports. And so the Chinese probably wouldn't mind seeing a slightly weaker renminbi versus the yen, but maybe keeping it stronger against the US dollar. So it's all that to say, let's keep an eye on the comments of Besant and the East Asian partners at the end of this week. I think it's going to be quite important for the FX space. But just getting back, I just want to finish off with a couple of markets here. Something which I forgot to mention just about oil here. It is interesting this week. We get the monthly reports, monthly updates from the three major sort of energy reporters. So the IEA, EIA, and OPEC. We start to get those today and in the middle part of this week. It'd just be interesting to see what they have to say about sort of oil sort of levels, inventory globally. That could be a little bit of an input just onto the crude oil price here. Finally, just want to just have a look at some of the metals here. So we see gold not doing a huge amount. Again, initially just on the news that the Iran proposal had been rejected. Initially, gold popped a little bit, but again, just to look at the overnight price action here, if we look at the 3-minute chart, you can see here that gold had initially a little bit of sold off a little bit and has continued to sell off here. So gold just in a sort of consolidation range just at the moment, not doing a huge amount here. The same thing with silver. Silver looks a little stronger, but it was rejected at the Fibonacci here. What I will be looking out for is copper. Copper actually very, very strong. You can see here the measured move here. It's getting up towards some of those measured moves. So it could start to face a little bit of overhead resistance here. And that could also be a factor. We saw Chinese data last night. We saw inflation moving up a little bit. So it indicates the Chinese economy is moving. Exports are on the rise. Imports are on the rise. That was the data last night from China. So a little bit of optimism about the Chinese economy. And of course, you know, the global build out in AI centers, electrification continues without a pause. So copper definitely doing quite well. But as I say, once we start to get to some of these measured move levels, we could see some sort of resistance. But at this point, no reason to be shorting that. Finally, just want to look at BTC here. BTC stalling out here and not doing anything particularly wrong, not collapsing or anything. It's grinding higher. It's at a pretty interesting point here because we have the fib level, the 61.8 fib retracement level here at around about $84,000. But this chart is looking quite good. A lot of the other crypto charts is also looking quite good. And as long as we have sort of a little bit of a risk on, you know, that's not a problem for crypto at all. Okay, guys, so that's it for today. Let's keep an eye out, as I say, the FOMC speakers. Also want to be seeing, of course, how all the tech stocks and the semiconductors continue, whether they continue their rise, and if there's any sort of a pullback in the Nasdaq, any sort of little consolidation there. And of course, tomorrow we have all of the inflation data. So that's it, guys. Have a great day. I'll be back tomorrow with the macro snapshot. Look out for yourself out there. Thank you very much. Goodbye.